day at the chart, a sea of red, talking puts and calls, but they just stare ahead. Strike price means nothing in the blank minds, margins and leverage like mountains to climb.
All right, welcome back to Noobs. It is Friday. We had quite the market yesterday. NVIDIA had their earnings. It's Friday, 11/21. NVIDIA had its earnings on Wednesday night, so the market was up really, really big after NVIDIA earnings, and then proceeded to get clapped around like 10:30, 10:40 Eastern time, and just was sold off for the whole rest of the day. I mean, talking from highs to lows, the NASDAQ was down like 1,000 points from highs to lows. The E-minis were down like 200, 250 points. The Russell was down 100. The Dow, I'm not even sure. So like, even though we're getting this pretty hefty bounce today, it's still not to the scale and scope that we saw in a move yesterday. We are getting a collapse in volatility. You can see the VIX is down $2.38. The VIX futures down 98 cents. S&P's up 200. Or I'm sorry, not the S&P's. The NASDAQ's up 200. S&P's up 72. Russell up 60. So, and the Dow's up 600. We've got gold up, small, silver down. And Bitcoin lower. Speaking of Bitcoin lower, we missed a huge chunk of that Bitcoin move, but the first thing I would do is probably close that Bitcoin, because we had look at open the Bitcoin futures up down there, /MBT down on the right. See where it says negative 1,400? They're down 1,500 on the watch list, bud.
Oh.
Look at the chart. See where they got all the way down to 80,000 from where we are. That's a 5,000 lower than where we currently are sitting, pretty much 4,000 some change. Remember I was saying we want a big 5,000 plus down day, which means the futures would have been down at one point like 6,000 or so. So even though we didn't catch that bottom, you could still close out that IBIT, or you could leave it on. I would probably close it out. It's already up 100%. And that's going to free up a little bit of capital for you. Oracle is your biggest pain point. But what you'll notice also today is HT is finally getting that bounce. So I would close that HT off, especially in a bear market. When you get these bounces, and when you get these bounces, go ahead and buy the vertical. In a bear market, like we're technically, try to it. We're technically not in a bear market yet, but we're seeing a lot of bear market behavior. So when you get the bounces in your favor and you're taking these shots on these long positions, you want to be pretty quick to manage them when you get the move in your favor. So that worked out well. You made $65 in that Home Depot. You made $120 shorting Bitcoin. We already closed off. Like, I think I closed your Webull short. You ended up making like
6 calls of Webull.
Yeah, I bought a few more for this earnings. The earnings actually came out. They were really good earnings. The stock didn't move. I'm really surprised it's not up today. But those calls they have a lot of time left on them, but they are definitely not working. Your biggest owie today, is Oracle. This thing just continues to go down. Remember, we sold a call in Oracle. Now that's trading for 8 cents. So we're going to want to do something with that call. We're going to want to, I would imagine we probably roll this thing down. Do we go to details? Oracle. Probably going to roll it out. No, let's just keep it in the same expiration. We're going to buy that one back for like 8 or 9 cents and then go down to like, good grief, there's nothing in here. I don't think you actually do. Go buy that back and then buy it back. Go out to like December. If you leave it at the 250 or go to the 260 in December. That's through earnings though. No. Go to the 280. Tell that 280 because if you're going to be going through earnings, that's fine. That's crazy far out of the money, but if you're, man, this thing is just weak. Weak, weak, weak. Another thing that you could do in here is you could take that February, buy it back, and then sell. If you want to do that, though, that's going to add a lot of risk. How far down? Go scroll down on the put side. Let me look at and see what those contracts are trading. No, down the other way, down price. No, not that far. Left. I don't. I think you do it. What I'm thinking of is basically you could buy this back, buy the 200 back, and then like sell two of the 175s. But you're doubling up your risk, so you're basically taking your risk from 20,000 in risk to if you have two of the 175, it's going to be 35,000 in risk. You're not quite doubling it, but you're adding a lot more risk. It's getting you further away from the money. It's going to give you more time. But currently, where we're at, we're sitting at. We just went in the money on this put. It's got a lot of value in it, extrinsic value. Almost all that's extrinsic value. About $20 of it is. I think we give this a little bit more time, see if we get a bounce in Oracle here. It's getting pretty overextended to the downside. Open up the chart and look at Oracle, and you'll see exactly what I mean. Change it to like a 6-month chart, even like a yearly chart. So, pretty extended here into the downside. Could we go lower? Of course. But I don't think we're going to be angry with ourselves for picking up some Oracle shares for 190 in a year from now or 2 years from now. So I think we just continue to sit through the pain in here and see what happens. You've got your Russell position is working a little bit today. You've got the micros up 150 now. It was down pretty big. And I don't think we touch anything in there. Your Tesla is pretty flat on the day. You could roll this Tesla call down some if you wanted to, I suppose.
The 460 or the 840? Well, the 840 wouldn't do anything, so.
The short call. Calling the 7-day. This one only has a week left on it. So, and it's only worth 40 cents or 30 cents. We sold it for like, I think close to $1. So if we rolled this down to like the 445 maybe, that'd give you a little bit more on there. Yeah, 40 cents. We're picking up pennies in front of a steamroller. Okay, go ahead and do that. See if we can get filled on that. Okay. Your MU is working pretty nicely today. What do you got going on in MU? NVIDIA also working today. Do you have long delta in here now in MU?
Long delta?
Yeah. You do have long delta. Notice the NASDAQ is definitely the weakest of the group today. Everything else is up like almost a whole percent or more. Like the Russell's up more than 1%. The NASDAQ's barely up 0.5%. Really weak. MU being one of those type of stocks. So scroll back over to MU and let's get our delta reduced in here. So we'll roll that 260 down some more. to like the 250. Yeah. This should flatten our delta out. Now we're back to just pretty much flat delta. MP, what do we got going on at MP today? Is this trading at? What's the price in there? Down in here today. MP lower on the day. Already rolled our calls down to where we're at the same call as our put. Still have a $1.30 in there. I don't think we do it. We're just waiting for a bounce in MP. There's not really much you could do. Home Depot we closed. IBIT we closed. Your hood worked out. What is hood trading at today? Okay, so it's pretty much unchanged. So even though we got a nice bounce in a lot of things, we didn't see a bounce in like hood. Look at Palantir, PLTR. So no bounce in hood, no bounce in NVIDIA. What about PLTR? No bounce in PLTR, no bounce in Oracle, no bounce in MU. Look at SMCI. Not really a bounce in here. Look at AMD. No bounce in here. So across the board, we're not seeing bounces in any of these like chip manufacturing drug stocks. Anything having to do with AI or chips, really just totally flat, if not down on the day. This APLD, we want to roll this down too. See that 120, that 25 call. Actually, let's roll this. Let's see if we can take this out to January. So buy back both of them. Let's see what we can do getting this out to January. Buy the 23 back. Go to Jan. If you sell that 20, go ahead and the 20 put. No, the put. Then without doing the call yet, click next and see what that's 180. Okay, so that's telling us without doing the call, it's going to be a $1.80 debit. So that means that we need to sell a call for at least $1.80. So go and look at the 27 or the 28 call. Do the 27. Then hit next. Now we're doing all of it for about a 26-cent credit. Go ahead and put that through. So that moved our risk if we get filled, which we probably won't right away. We're probably going to have to chase that because it's a 4-leg strike or a 4-leg trade. So move that down just a couple pennies. There you go. Try that. Nothing. Right. If that doesn't work, don't change it again. Cancel it, and we're gonna do 2 separate spreads. Sometimes you get better fills so just do them individually, each of those spreads. So buyback. Buyback that, and then we had the 27. Next, go ahead and send that. Really wide.
There we go.
Okay. And then, yeah. Back to 23. Going up to January, selling the 20. Yep. Go. So the first one was for a 60. Well, the first one was for 82-cent credit, and the second one was for a 65-cent debit. So net did that for credit, small credit. But more importantly, we moved our risk from the 23 strike all the way down to the 20 strike, and we give ourselves a little bit more room on the upside if we get a bounce. Angel Studios down yet again. I don't think we do anything in there. We already rolled out your Angel Studios that expires today, didn't we? So the only ones expiring today are going to be those calls. That's fine.
All right.
The rest of it's short puts. Scroll back. AG, I don't think we touch because that one's still just sitting at the money. Archer is getting a little bit of a bounce, it looks like today. I feel like this was lower yesterday. You're in the December expirations in there. I don't think we adjust those expirations to roll them out until next week, right? You're in December in there?
Yeah. December 9th.
What is, they're only worth 17 cents. Maybe we do roll them out. What is the January 9 call trading for? That's really not giving you much of anything.
The January call?
The January expiration, the 9 call. What's the value of that?
Oh.
Like that either. I think we do probably nothing in here. And just let this market work. But we're starting to see this market roll over yet again here now as we speak. Palladium, what's your call worth in that PALL? Hasn't really come in that much. Still 590. You can give that more time to work as well. Oracle still selling off. Nvidia. What's your delta in here?
37.
37.
38.
Which means if we only have 30 shares, you're leaning long and you're scroll back to the left. Man, we're getting pretty close in this too. So we're still out in January. If we were in need of some capital to be freed up, you might want to make an adjustment in here, but you're still $5 away from the money in here. More than likely, you're probably going to get tagged in this. Go look at the put in here and see what you can get if you roll this out further in time. But it's trading about $10. If you take the
Oh my goodness. There we go. Boom. Bam.
if you were to take this out to like say March,
What was it trading at the 173?
this would take it down to the 160 there. Yeah, do that one. That'll get rid of some of your long delta. Go ahead and send that. Takes you out there pretty far in time, but it removed what? What is that now? What's your so we removed about 10 long delta in there by doing that. So go ahead and open a video back up and see now how much you removed what? $1,300 in risk as well. So I don't think we adjust the call. I think we just leave that go. That probably freed up some buying power too. Yeah, see, so you freed up about $1,300 more in buying power by doing that. Man, look at the VIX pop back up here. Look at the VIX futures. Was down like $1, and now on this down move, it's really starting to rally again. Definitely not out of the woods. Tesla. Let's look at Tesla one more time. We've got the 340, so we're still $55 away in Tesla. And Tesla's actually been one of the stronger ones. Hasn't been nearly as weak as even today. It's probably only down tiny, if not up. I think we leave it right there in March. We don't roll a Tesla anymore.
Okay.
Just give that some time. So I think that's all the adjustments that we do as far as managing existing positions. We could put on some new positions. You don't have a lot of short delta. I think we close most of your short delta. So look at Bitcoin now. We should have left Bitcoin on. You would be able to close it now for a much better price. Trying to think of what else we would want to get short. I'm kind of hesitant to get short, like good PLTR at these levels. AMD. Yeah, I'm not really sure. I'd have to look through like a watch list of things to see like what would be a good way to get some short exposure right here. I suppose you could open up your IBIT, but I suppose we could. You know what you could do is you could just sell some calls in the E-mini futures. So go to the /MES. You don't have any on here. MES. It's on your watch list. Yeah, it's on your watch list. Then go to you see the one that says December 25th, 28 days, and it says week 3. Scroll up to where it says like 6,700. Go ahead and see. Why is that saying the ask is? What the heck? Why is the bid and the ask so far apart from one another? Are we in the wrong expiration? Like what's going on here? That's wild. Close this. Do the AM settled.
What?
Do the one that says 28 days AM settled. Wild. Yeah, that's better. Go to, we're doing the wrong expiration. 6,700 would be $90. Do this. Scroll down a little more. 68. Do the 60. Do the 6750.
750.
Let's sell that call 6750. Should sell for about like $69.
330.
Just
The price is
take it up. Take it to like 69. Oh, that's the mid is 69? Yeah, go ahead, do it at 70. See if you can get 70 for it. I doubt you will, but try.
Oh. I only got it. So let's do that. 6950.
Yeah, that's fine. Yeah. Still not getting filled. Because the S&Ps are falling pretty quickly. There you go.
Boom. Boom.
So take it down at like 50 cents below that.
Boom, boom, boom.
Whoa.
68.
Yeah, that's fine. Yeah. Oh, you got filled. Never mind.
Oh.
Okay. So that's going to give you how much short delta in scroll to your right. It gives you 1 delta, which for beta weighted, open it up.
What up? Yes.
So it's beta weighted. Basically, it's like being short 17 SPY, which eliminates, you're still overall basically long 100 SPY. At least that helps. And you can't put on more because you don't have enough capital. That costs like 2,000 something to put on.
Okay.
But that'll do something. Oh wow, look at the S&Ps now. They're bouncing all over the place. It was just down it was down to being up 49. Now it literally a couple seconds ago it was up 55. Now it's back down to 50. It's just really choppy markets. What's the volume? Go to your watch list, or not your watch list, but the search, and type in /ES. ES, and then just hit enter. Then go see to that little toggle arrow to the left of the price.
17.
So 1.7 million contracts have traded so far today. That's pretty good volume. So we're not trading thinly in this market. We're getting volume. Go to your chart. The chart.
Oh,
You can see that as we're getting this down move. Why is this not giving us the continuous contract? Did you click on the thing or did you hit enter?
I clicked on it.
You can't do that
Oh,
because that'll only show you this contract. You want the continuous one. Go back in and type in /ES. Now you see how it's a continuous contract where you see how the volume down at the bottom is all throughout, whereas before it was only giving you the volume for this monthly contract. So there's two different ways to look at these futures charts. On the continuous contract, it charts it all out as the contracts roll off and become, so like with futures contracts, they expire. So you've got a bunch of them all trading at the same time. And as they get closer to expiration, people roll their contracts from the current month to the next month. So all the volume shifts in the contracts from one month to the next, to the next, to the next as the month goes by. And if you look at just the monthly contract like you were doing, you're not going to see the behavior before that.
okay.
If you click on it like you did, it's going to show you just that monthly contract, that expiration. Whereas if you just click enter after it, it'll show you the continuous one. So if you go to spreads, that'll help show you what I mean. So you see how this on this spreads where it says the active contract is this ESZ25. The Z letter in that contract corresponds to a month, and then the 25 is 2025. So when you go to ZSH26, it's telling you out 119 days from now. So corresponding to a month, and you see how they just progressively get further and further out. Notice the prices also are different in each of these contracts. So the one expiring in 28 days, the bid and the ask is 66.14. The one expiring in 119 is 66.72. So there's about $50 or more in difference in price built into that extra 100 days. That's because of the cost to carry and the future likelihood that the price is going to be higher. People are paying for that longer exposure and so on and so forth down the line.
Okay.
Yeah, you got a little bit of a futures lesson right there today. I think that's good for the day. You are up on the day, which is a nice change in direction. You've been really getting clobbered, but overall, your position's not terrible. I'm not really that worried about you being down into this because what you're doing is continuing to sell and collect little wins along the way on the downside. I mean, you've made money in BE, you've made money in Robinhood, you've made money in Bitcoin, you've made money in MU as far as on your calls, rolling them down, adjusting them. You're still down in MU, but you've been adjusting pretty much mostly your calls to the downside. So those have been continually winning for you as this market keeps going down. So when we get a turnaround, if we ever get a turnaround, it seems like in this market, but when we get a turnaround, you're going to be paid heavily for those puts that you have out there. So you're going to see a day where your P&L is up like $2,000 or $3,000 in a single day on a lapse in volatility and a good turnaround. And one or two of those type of days, and you're right back in the game. And then we'll look at kind of adjusting, buying some of the guts and selling wings at that point,
Okay.
widening everything back out.
All right.
All right. So that's all we got for today. I hope that was helpful for everybody. Don't forget to like and subscribe and check us out in Discord. Come in, follow us, and be part of the community. Thanks for watching.
Another day at the jar, a sea of red, talking puts and calls, but they just stare ahead. Strike price means nothing in their blank minds. Margins and leverage like mountains to climb. Spent the whole week on Delta and Greeks. Gamma theory ain't cutting through their peaks. Volatility shakes, but they don't feel the quake. Future contracts blur on this financial break. Can't you see the candles rise and fall? Risk and reward, it's a game of all or no. Options open, futures closed, eyes blind. Frustrated fathers dream in the stock grind. These waiting specs, faces blank as empty streets. Hedging positions, but the questions repeat. Time decay means nothing to the young souls. In this market play, it's like digging holes. Iron condor flies, but it never lands. They can't grasp the feel of these trade winds. Liquidity try choking on the sand. Profits and losses, they'd rather go play bands. You see the candles rise and fall. Risk and reward, it's a game of all or no. Options open, futures